ensure that SMEs have the needed data for decision making, for regulatory compliance, and for process improvement. That's the core mandate of Nexus BI. So it's business intelligence for business improvement. We are trying as much as possible to provide technical knowledge to business owners, finance officers, accountants, student consultants, and even bring to the attention of GRA officials some gaps or some issues that is going on in practice that probably, if they take heed to, will help in overall tax compliance in Ghana. So this is the target audience that we seek to reach. But in no way do we intend this webinar to be a legal consulting services for which participants join might place reliance on to make decisions. If need be that participants would want a professional consultancy services, you can always reach us at info@nexusbi.co, or you can give us a call. Then we can have a tailor-made decision for you. So this is a professional disclaimer on the content of this webinar. As you rightly saw on our marketing flyers, we are focusing on VAT legal framework. That's the masterclass section that we are trying to educate the general public on, business owners on, finance officers on, and even students and consultants. In our maiden masterclass, we spoke about the 3 components of every tax system. So if you missed our maiden section, kindly go onto our YouTube channel. We have the recorded section there. If you have any issue, you can still contact us on info@nexusbi.co, and we'll be glad to hear from you and address any issue that you might have. So currently, VAT administration, the legal framework is being managed by Act 1151. It was enacted somewhere in December and assented beginning of this year. So that's the current law or legislation that regulates all VAT issues in Ghana. It's divided into 14 parts. It has 5 schedules. It has 75 sections. And the enactment of Act 1151, what it did was it repealed every existing VAT Act that there are, the principle of which is the Act 870. So with the enactment of the current VAT Act, what it's doing is it repealed these acts, 870, 890. So these are the various acts that the new VAT Act has repealed. But nevertheless, when a new act comes in and repeals an old act, and GRA is auditing you for prior periods where the old acts were in force, you will be liable for every provision in the old act. So the old acts have been repealed, but they have been repealed prospectively. In retrospective view, they are still in force. So it's like an important note to take home is to know that repealing of an act, any act, whether VAT Act or any other tax law for that matter, usually the repealing of the act happens retrospectively. It happens prospectively, but retrospectively, they are still in force. So in case there's any audit that you are facing for prior periods, let's say 2021, 2022, where we had at 870, and you need any guidance or any assistance for any historical tax compliance or audit defense, kindly reach out to us. Let's look at the overview of VAT for the ordinary person. When you take a VAT transaction, right, when you take a VAT transaction, there are three main parties to any VAT transaction. There are three parties to any VAT transaction. The first party to a VAT transaction is a supplier. The second party to a VAT transaction is the customer to whom the goods are being sold or to whom the services are being delivered. Then the third part of a VAT transaction is the GRA, who is the principal owner of any VAT that will be charged by the supplier. So in our maiden discussion, we looked at the responsibilities of these three parties, and we also looked at the risk and the challenges that these three parties face. So when we take the GRA, for instance, the risk that GRA faces is that suppliers are supposed to charge VAT. So if suppliers are not charging VAT, or if they're not charging the right amount of VAT, or if they charge and do not file, these are all risks that the GRA is facing because the government will not get the needed revenue for operation. There are the suppliers too. If they don't charge, they face penalty and they face sanction in the VAT law. With customers, are they being charged for VAT for goods that they are not supposed to pay VAT on, or are they paying the wrong amount of VAT? Because currently the effective VAT rate is 20%. And before Act 1151, it was 21.9%. So the question is, are we still paying, is the customer still paying 21.9% or paying 20%? It will surprise you that some businesses have not gotten their system configured to charge the current 20%, and they are still charging 21.9%. So business owners, customers are also faced with the risk of paying for VAT, wrong VAT rate. Or in instances where the good is an exempt, they are still paying for VAT for such good. Today's webinar, we will look at VAT registration and how to register. Then we would look at the benefit of registering for VAT. We will look at the room or the criteria where businesses that hitherto under the old act were supposed to register for VAT, but under the new act, it doesn't place any registration obligation on them to register for VAT. So the benefit of deregistering from VAT. So when we say VAT, it's simply a tax type that a business are required to charge on taxable supplies. So for VAT, before you can register for VAT, it means that you need to have a tax portal or an account with GRA. By legal definition, every business, whether a sole proprietorship business, a company, a partnership, a trust, an NGO, are all required to register with the Ghana Revenue Authority. It will surprise you that churches and other religious organizations are also required to register with the Ghana Revenue Authority. The registration with the Ghana Revenue Authority does not presuppose that the entity is liable for payment of entity tax. Example, when you take an NGO, the NGO registering with the Ghana Revenue Authority does not necessarily mean that the NGO's donations or the contributions or the pledges that volunteers or financiers give to the NGO for their humanitarian activities are liable for taxes. No, but with registering for registering an NGO with GRA, it presupposes that there are other tax types that the NGO, being an entity, is supposed to charge or pay. For instance, if the NGO has employees, those employees in the NGO are liable to pay income tax, employment income tax. So with the NGO registering with GRA, they got opportunity to pay the employment income tax for their employees. Right? But for the NGO's earnings, it is not liable to pay, liable to tax. So let's note this. So there are instances where we have come into contact with business owners, especially those in those that are in they have the concessionary rate like farming. So farming business, for instance, depending on the type of farming, whether it is cash crop, tree farming, there are several concessionary periods that those businesses enjoy under our tax law. The fact that they are supposed to enjoy a concessionary period does not prevent you or does not absolve you from the registration of your business with the Ghana Revenue Authority and paying other forms of taxes. So the concessionary period grants you concession for your business income. But if you have POI to pay, if you have VAT to pay, if you have any withholding on account transaction to withhold, then you'll be liable for those taxes. So let's note this. So if you have anyone, if you have business owners on the call, and these business owners have been operating for some number of period without registering, it's important that we try as much as possible to get registered with the Ghana Revenue Authority. Opening a tax portal is free and registering for VAT is free, but unfortunately, GRA charges money for that. So if you have GRA officials on the call, there's a call. The GRA as an entity is a customer service oriented government entity that is supposed to guide, educate, and support businesses. It's okay. So it's free, it's absolutely free. There's no need to bargain. I've had instances where we have to bargain. There's no need to bargain for the registration of VAT and registration of your tax portal. If you face any of such challenges, please feel free to contact Nexus BI for assistance. Thank you. So that's basically how to register for VAT, and it should be that simple. You open your tax portal, you apply for VAT as a tax type, and that should be it. It will feature on your tax portal. When do we register for VAT, right? When do we register for VAT? So for VAT, unlike withholding tax where there is no timing for businesses to withhold when they are making payment on account, for VAT, there is certain requirements or certain threshold that businesses are supposed to meet before they are mandated by law to register and charge VAT. So with Act 870, we have threshold for businesses that were supplying services, but with Act 1151, that threshold has been eliminated. So once you supply services, you are obligated to register for VAT and charge for VAT, irrespective of your turnover. Please note that I use VAT, right, 20%. It is with the assumption that VAT is liable together with the COVID-19, is liable together with the Get Fund levy and the NHIL levy. So the Get Fund levy of 2.5%, then the NHIL levy of 2.5%, making 5%, together with the VAT rate of 15%, making 20%. So when I use VAT, it is VAT plus levies. The levies have their own acts, but they are charged together with the VAT. So principally, 1151 looks at just the VAT, even though in practice, we charge the levies together with 1151. So with the new act, there's no threshold for businesses supplying services. So in case, let's say, you provide consultancy services, irrespective of your threshold now, you are required to register and charge VAT. But previously, it was 500,000 Ghana cedis under Act 870. So let's take note of this. So no threshold for taxable supply under Act 1151. But for businesses that are into the supply of taxable goods, the threshold is 750,000 annual income. So if your annual income is 750,000, or in the course of the year, you realize that in the course of the year, you realize that your turnover, let's say mid-year, about January to July, is around 600,000. Then obviously you should reasonably anticipate that you cross the 750,000. So you're supposed to register for VAT. So for taxable goods, the threshold is 750,000, right? Nevertheless, you can do voluntary registration, even though you have taxable goods of less than 750,000 Ghana cedis. In the previous Act 870, it was 500,000. It was 500,000. So there's this overlap. You see, there's this overlap. When you check the current Act 1151 for taxable supply, you must register when your turnover is 70,000 and above. But in the old Act, you were supposed to have registered when your turnover was 500,000 and above. So if currently we have a business that was required to register for VAT under Act 870, right? When their turnover was around, their turnover is still around 600,000, but about 500,000. You realize that in the current law, the 750 would absolve you of registration of VAT, right? So if you have such businesses, then you have a legal case to ask for, apply for a deregistration if you don't want to, or you don't see the benefit of VAT registration, or if it's impacting negatively on your pricing position. So you would want to effectively remove 20% of your cost. You can apply for a deregistration. So under the new act, it's 750,000 Ghana cedis. And there is a legal justification for that, right? So 115 has repealed 870, so we have a legal case for that. So if you need any assistance with that, please feel free to reach out to us. But we just want to explore the legal basis well, so that you have every confidence when you are applying for the deregistration. So when we check section 73, initially when we started the presentation, I think I made mention that there are 74 sections in the new Act 1151. When you check section 73, subsection 2, it reads that despite the repeal of the enactment that we saw, the old enactment, right, the regulations, bylaws, notices, orders, directions, appointment, or any other act lawfully made or done under the repealed enactment, which are inconsistent with this act and in force immediately before the commencement of this act, shall be considered to have been made or done in this act and shall continue to have effect until reviewed, cancelled, or terminated. So once there's no inconsistency between the old act and the new act, then the new act will adopt it. But when you have instances where the old act says register when it is 500,000, the new act says register when it is 750,000, obviously we see that there is some form of inconsistency in there. And because of that inconsistency, anytime there's inconsistency, what happens is that the current enactment will supersede the old enactment. So that's our legal basis for that deregistration. And there are some benefits that small businesses, right? There's a reason why the framers of the law, in their wisdom, they capped it at a certain threshold, right? They capped it at a certain threshold. The rationale is that the capping is to ensure that small businesses, right, who do not have the muscles for detailed accounting, records, bookkeeping, will not be entangled with breaking the law, right? So that's the vision of the people who enacted this act. So there's a reason behind it. And also some of these small businesses are not able to enjoy the economics of scale to reduce prices to withstand stringent competition. So they are prevented from being exposed to the demands of Act 1151. So when small businesses are deregistered, these are some of the benefits that they will get. Realize that they get to reduce their prices significantly because they are able to price, because VAT is a tax on your gross earnings or your gross revenue. So if you are selling any good for, let's say, 100,000, the VAT becomes 20% of 100,000. So your customers are supposed to pay 120,000 Ghana cedis. This 20,000 that is added to the 100,000 Ghana cedis gross revenue, the burden of this 20,000 will be dependent on the elasticity of demand of the good. So if the good is elastic good, you obviously know that a small change in price will result in what uncoordinated change in quantity demanded. So if you should change the price of elastic demand, you realize that probably you might even lose out on your business. But if it is inelastic, irrespective of a small change in price or a big change in price will result in an insignificant change in quantity demanded. So the customers still demand same quantity irrespective of price. And a typical example of inelastic demand product is fuel. So for instance, if you need, let's say, 250 liters of fuel to move from Accra to Kumasi, if they increase the price of a liter of fuel, you can't see that because they've increased the price of fuel, you want to use 200 liters when indeed you need your 250 liters. So realize that once we're able to deregister for small businesses, you're able to reduce your pricing, right? And able to compete more better. Yes, it makes your products very competitive. You can increase sales. It eliminates obligation to charge and collect VAT and filing of VAT. If you don't file VAT or if you miss VAT by just a day, you are paying 500 cedis, and every other day that the return is on file, you are paying 10 Ghana cedis. It looks small, but if you've not filed a VAT return for a particular month, let's say 3 years ago, imagine the number of days times 10 cedis plus 500 cedis. This is just the amount. This is like a penalty that you are paying. On top of this penalty, you are paying interest. So imagine. So if small businesses who don't have the proper structures in place messes out on the payment of VAT, they are exposed to some of these penalties and interest. Yes, so it removes the burden of always having to file on the GRA portal. Okay. But businesses should carefully assess the impact of VAT deregistration before they embark on such an exercise. If you want a consultancy services on that, please feel free to reach out to us at info@nexusbi.co. Okay. I've always said anyone who claims to be a master of VAT, right? Anyone who claims to be a master of VAT is a master of what? Exempt supply. And with this knowledge, right, nobody at all can underrate the fact that if you want to be a master of VAT, you should master exempt supply. Because in my presentation so far, I've mentioned taxable supply, taxable supply, taxable supply. The set of taxable supply is infinite, but the set of exempt supply is finite. So at any point in time where we get to know the set of exempt supply, we would add some kind of leverage that we know once we know exempt supply, we will always be in a position to identify, will be in a position to identify taxable supply. So that is the reason why we are revisiting this section today, right? So anyone who wants to join can please come. So that's why we are revisiting this section today. We will spend some good amount of time looking at exempt supply in our masterclass today. These are some key points in the first section of Act 1151, but I'll skip it. We'll look at it later. We'll just look at the categories of supply in Act 1151. We have exempt supply. Exempt supply simply means that supplies that are not taxable, basically that's it. So you are not supposed to pay tax on them, and you're not supposed to register for VAT for those taxable supplies. Then we have those, so if it is not exempt, then obviously it is taxable. These are the two main categories of supplies that we have in our VAT law. So it is either it is exempt or it is taxable. But there are some instances where we have businesses that sells or supplies both exempt supply and taxable supply. So in that case, we will call the supply of that business a mixed supply. So when you go to Melcom and you buy, let's say, seeds, sesame seed, the sesame seed is an exempt supply. If you buy, let's say, biscuit is a taxable supply. So when you are bringing these two goods to the counter or to the cashier, you are bringing a mixed supply to the counter. But sometimes for taxable supply, there are some taxable supply due to the destination of where we are making a supply to, the supply is taxable. That means you are supposed to tax it, but the tax rate is written down to 0. So it's called a zero rated supply. So zero rated supply are actually taxable supply, but the tax rate is 0%. And there is an economic justification for having a zero rated supply. And usually it is supply outside the shores of Ghana or supply to an area that has been designated as a free zone area. So when you take export is still making sales or selling, right? But are selling outside the shores of Ghana. And in order to enjoy foreign reserve, you would have to encourage people to export more. Like they're exporting and you are taxing them. Like there's a disjoint in achieving those two economic benefits. You want more tax revenue, you want more foreign reserve. You can't have the same at this, you can't increase both at the same time. So there should be a trade-off. So the trade-off is, okay, let's bring down the VAT rate to the 0 and encourage more export. Relief supply, it's not taxable supply, but then the personality or the person to whom you are selling the goods to makes them they are relief of paying taxes. So you still have to charge the VAT, but they will not pay the VAT. They will give you what we call a VRPO, a VAT purchase relief order, in place of the VAT component of the goods, right? For the goods, they will pay for the value of the goods, right? But for the tax component, they will issue a certificate telling you that the government through GRA has given them some status not to pay for VAT. There are some instances where you have foreign consulates or missions in Ghana that are not supposed to pay for this VAT. And the similar relief is given to Ghanaian consular in their country. So let's take note. Then we have the taxable supply itself, right? The legal justification for taxable supply can be found in we can find it in section 35 and section 36. Sorry, 35 and 37. So understanding these two sections gives us the power or knowledge to understand the set of exempt supply. I hope you're all ready. I hope you are all ready to explore the world of exempt supply. Okay. So the list of exempt supply can be found in the first schedule of Act 1151, the VAT Act. So we'll start with paragraph 1. So except otherwise provided, the supplies specified in this schedule are exempt supplies for the purposes of section 35 and 37. So take note of some of these items that we would want to discuss, right? And you might see it as insignificant, but it might cost business save business a lot of money. Next time you go to a shopping mall and you are buying some of these things and you check, actually these big shops, you will check the invoice that you receive and they've charged VAT on the whole amount of item that you've picked from the shelves. So if you go to any of the shopping centers and you buy maize, probably go to shopping mall and go and buy maize. You can buy seeds, right? Healthy seed. The healthy seeds are supposed to be exempt. You're not supposed to pay VAT on healthy seeds. But when you check the receipt that you are given, right, you realize that there are some instances where you pay VAT. You are being charged VAT. The supply of the following agricultural and aquatic food in their raw state and obviously produced in Ghana. So the intent and purpose is to encourage farming in Ghana. So all these are exempt. And in addition to being exempt, any edible animal meat or offal, livestock, poultry, swine are also exempt. Even if they undergo some minimum processing like salting, smoking, they are still exempt. So let's take note of this. Supply of live animals raised in Ghana, exempt. So if you are in the rearing of any of these livestock or poultry, you are not supposed to register for VAT. You are not supposed to charge VAT. Even if you register for VAT, you are not supposed to charge. So you cannot charge. Even if, let's get a caveat, or even if you are required based on a contract with a government institution to register for VAT, you can register. Yes, it's fine. It's for the sake of expanding your business. You can, but after registering, you cannot charge VAT. That's what you should know. You cannot charge VAT. Even if you can register, you cannot charge VAT. It's exempt. It's as simple as that. No GIA official can force you to charge VAT on an exempt. That's it. Except otherwise provided, supply specified in this act as okay. We've gone through this already. Rice, shea butter, goat wine. Okay, then agricultural inputs are also exempt. So if you are into farming and you are buying certain propagation inputs, you are not supposed to pay VAT on them. If you supply, you are not supposed to charge VAT on them. Various agricultural chemicals, fertilizers, insecticides, you are not supposed to charge VAT on them, including vaccines. You are not supposed to charge VAT on them. Five, supply of gear designed exclusively for fishing, you are not supposed to charge VAT on them. So if you are in any of these business categories, you are not supposed to charge VAT on them. You can be forced to register for VAT, but not to charge VAT. Because when you charge VAT on some of these supplies, to me, I will not pay. Supply of water, excluding water commonly supplied in bottles or other packaging suitable for supply to consumers. So sachet waters, you are not supposed to pay VAT on them, but bottled waters, you are supposed to pay VAT. Supply of electricity to a dwelling, you are not supposed to pay VAT. Usually for residential purposes, you are not supposed to pay VAT. Here is the trick, supply of textbooks. So supply of textbooks and supplementary readers that are on the approved list of the ministry responsible for education, you are not supposed to pay VAT on them. So the list is published by the Ministry of Education. So if you want to supply any textbooks that is approved by Ghana Education Service, you can get the list and know those textbooks that you are exempt from paying VAT on them. Newspapers, atlases, charts, maps, music, you are not supposed to pay VAT on them. But there's an exemption, right? Or exception, let me say that way. If you are importing textbooks, exercise book, newspapers, publication, and chat, those ones you pay VAT on them. So you shouldn't confuse the two. For newspapers, textbooks, right, atlas, chart, maps, produced in Ghana, exempt. If you are importing, you pay VAT on them. Now is very important. Educational services. So if you've established an evening school or remedial school, you're not supposed to charge VAT. If you have a primary school, a DV school, educational services, you don't charge VAT on them. Educational services that don't include, let's say, for instance, on 1st August, we'll be starting our Nexus BI Excel school, right? A lot of people are excited about this Excel school. But when you go on the social media, a lot of business consulting firms train people on Excel and they charge money, a good amount of money. That money, you're supposed to pay VAT on them. This educational services looks at the normal kindergarten, primary school, GES form of education. But those other professional courses, you would pay VAT on them. So that's one exclusive of educational services. So let me just clarify that. So those consulting services that are conducting Excel school and charging fees for, they are supposed to pay VAT on them. But for Nexus, please feel free. After this webinar, we'll share our link. Please join. We are organizing a 12-week solid Excel training for business owners, finance officers, accountants, students, even GRE officials. Say hey, GRE officials. Supply of laboratory and library equipment for use in providing educational services. You are not supposed to pay VAT on them. Interesting list, right? Interesting list. Yes, 12. Pharmaceutical, no, let's go to 11. 11 is important. Medical services and medical supply. So medical services include diagnostic centers, right? It include diagnostic centers. So if you have a diagnostic center, you are not supposed to pay VAT on your services. So Ghanaians need to have good health. in assessing good health, they shouldn't be paying 20% to the government. Fourth, supply of pharmaceutical in Ghana, right, free of charge. It excludes cosmetic. So if you have creams that will enhance your backside, those ones you pay VAT on them. Supply of domestic transportation of passengers by road, rail, and water, except the supply of haulage or the rental or hiring of passenger or other vehicle. See, the government in their good judgment have seen that if you have money to pay for flight tickets, then you have money to pay for VAT. So if you are commuting from Accra to Kumasi and you use flight, you pay VAT. If you use road, you don't pay VAT. Even though there are no proper railroad networks in Ghana, if there are, when we use them, we don't pay VAT on them. But the transportation, it is passenger transportation. If it's a haulage or a rental or hiring of vehicle, those ones you pay VAT on them. What is very important, supply of machinery and parts designed for, so let's look at the various sectors that the exemption applies. So machinery and parts are not exempted in absolute terms. They are exempted based on not the type of machinery or type of part, but it is the industry or sector going to use it, right? So we can have a plant. If the plant is used at a mining sector, it is exempt. If the plant is used in a school, it is not exempt. So we should take note of. So sometimes to make issues very clear, there is sometimes a mining list. There is sometimes a list that the GRE has. So as to know that this machine are some machine that they are special purpose machinery for an industry. So you know that there's only a mining industry that will use it, or you know that there's only a railway or tramway business that will use it. But nevertheless, machinery and parts used in agriculture, veterinary practice, fishery, aquaculture, horticulture, mining, the mining as specified in the mining list, determined by the minister responsible for mines and prescribed by them. So for mining, usually for mining, there's a mining list, right? Because it's a capital intensive industry. So in order not to leave the floodgate open, the government tries as much as possible to control it with a mining list. But for the other sectors, there's no list that controls the exemption of machinery and parts. Manufacturing, there's no manufacturing list. But manufacturing is not a dedicated industry where you can build a list for. But for mining, you can. Railroad and trauma, you can't. Upstream petroleum operation, that one to there is also a list. So mining and petroleum are a capital intensive industry. So the government tries as much as possible to come up with a list so that businesses do not use this exemption as a way of avoiding the payment of VAT by bringing in sophisticated machinery that they are not necessarily going to use. Dredging. So let's take note. Interesting. So supply of crude oil and the following hydrocarbon products are exempt. So petrol, diesel, liquefied petroleum gas, kerosene, RFOs, and natural gas. They're all exempt. So if you go to the fuel station and you are buying your petrol, your diesel in your car, you pay levies, you pay other forms of taxes, but not VAT. Right. So not VAT. Supply of the following immovable properties, including land, tenant for dwelling, and not accommodation in dwelling. This one is very important. Accommodation in dwelling. So usually if you want to know how the Act defines accommodation in dwelling, we can look at it later. But usually if you have Airbnb, right? If you have Airbnb business, it's accommodation in dwelling. You are not supposed to charge VAT. Land use or to be used for agricultural purposes, you don't pay VAT. Okay. Supply of financial services, excluding non-life assurance. right? So non-life means that car insurance is VAT, but if you go and do life insurance, it's exempt. Supply of goods designed exclusively for persons with disability, it's exempt. So if you have crutches, if you have walkers, if you have wheelchairs, these are exempt. Postage stamp exempt. Expedited services is taxable, right? For instance, when you use service of DHL, it's taxable. Salt for human consumption, it's exempt. But salt for industrial use is taxable. So just note the act is clear, 20, paragraph 20. So if you have a business that uses salt as a major reagent, as a major component in their operation, that is taxable. Mosquito nets, exempt. And this one, 22 was very important. During our meeting discussion, we had a question on it. So supply of paper for the production of exercise books and textbooks, exempt. The textbooks and exercise books produced in Ghana to our exempt. So the paper itself is not exempt, but it is the purpose or the usage of the paper that makes it exempt. So if you have businesses that are supplying it for printing or printing in offices or printing letterheads, though the unit of that paper is not for textbook or exercise book, so the supply of that paper will be taxable. Import of mild carbon steel for manufacture of machete, exempt. So it is not the importation of mild carbon sheet that is exempt. It is what is being used for. So if you are importing mild carbon for, let's say, bridges or for the chassis of a car, it is not exempt. It is taxable. Let's take note. The importation of plant and machinery, right? 24 is very specific, right? Importation of plant and machinery designed specifically to be used in the automobile industry and the kits by an automobile manufacturer on assembler who is registered. So it's not just in the automobile company that the plant and machinery that they import will be exempt. There is a Ghana Automotive Manufacturing Development Program where the government, under previous leadership and current leadership, is trying as much as possible to ensure that car manufacturers will come and assemble their vehicles here in Ghana to ensure that we are able to reduce the price of tier rubber cars. But unfortunately, we are nowhere close reducing the price of tier rubber until the recent Chinese influx of electric cars that is trying to push business to reduce that price. But there's this program where business are supposed to, the government is encouraging car manufacturers to come. So there's an assembly plant there's an area in free zones for that. So if you're a business that have registered under the program, you'll be exempted if you import plant and machinery. Electric vehicles for public transport, you'll be exempted. So if you are looking at, let's say, entering into the business of intercity transport, you can import electric vehicle. When you import electric vehicle, about big chunk of that money, if you import them from Asian country, the car will come at a cheap price. You also not pay VAT for it. We're going for public transport. That's a good business idea that you can pick from here, or that you can share with other financiers and another guidance and consultancy eyes of Nexus. We can guide you, establish it, right? So summary: agricultural produce, inputs, aquatic produce, live animals, fishing gear, water including sachet, electricity to boiling, textbooks, newspaper, music, education services, medical services, supplies, pharmaceuticals in Ghana, domestic transport, road rail, water, machinery and parts, petrol and other hydrocarbons, immovable property, financial services, goods for persons with disability, salt for human consumption, mosquito nets, paper for textbooks and exercise books, carbon steel for machetes, plant and machinery for business or manufacturers under the Ghana Automotive Manufacturing Development Program, importation of electric vehicles or public transportation are all exempt. Now they take away. Now we are armed to know that, okay, if you're able to even know about 80% of these exempts in memory, commit them to memory, what happens is that if it's not in this list of exempt, please, it is what? Taxable. It's as simple as that. If it is not in this list of exempt, it is taxable. Right? It's very simple. So if you've not seen it here, it is taxable. But if you've not seen it here, it is taxable. But if we are selling that taxable outside the shores of Ghana, it becomes what? Exempt. Simple as that. So with this knowledge, to some extent, you can say you are a master of VAT because you get to know all the list of exempt supply. It means also that you also know you have a fair idea of all taxable supply. It will help you to understand competition, because if we are all venturing into a business and I'm entering into a business that is an exempt supply business, let's say the supply of papers for textbooks and exercise books, my business will not pay VAT. But if you are supplying the papers for the printing of letterheads, the general office printing, you would have to charge 20% on your seals, whereas I am not obligated to charge 20%. So in terms of competitive advantage, price competitive advantage, I'm able to charge a lower price than you, right? So proper input tax recovery. Proper input tax recovery means that for exempt supply, right? For exempt supply, when you make exempt supply, any input tax simply means that the taxes that a business pay on their purchases, right? And under the leadership of this new government, we've been able to increase the input to 20%. I think the current leadership of this nation deserves a round of applause. It's not easy. When you look at the strategic benefit of VAT, it was eroded when we stopped claiming the levies as input. By restoring it, it gives some kind of strategic benefit to businesses that requires or that wants to deal with only VAT registered businesses, because when I deal with VAT registered business, any VAT I pay, I'm able to recover. But if I'm not dealing with a VAT registered business, if the person charges me a value that invariably there's a hidden VAT in it, but it's not on the face of the invoice, and I'm not supposed to register for VAT, I cannot recover. So basically, input VAT is simply VAT that you pay on your purchases, right? But if you are supplying only exempt supply, if you have input VAT, you cannot claim it. You can never claim it. So what you are supposed to do is that you are supposed to add that input VAT to your cost and charge it through your pricing mechanism, right? But if you are dealing in both exempt and taxable supply, you should be able to know the value of exempt supply and know the value of the taxable supply, so that with the input, we would apportion the input credit, right, using the value of your exempt supply and the value of your taxable supply. So with this understanding, once you know that if you are in the business of a mixed supply, both exempt supply and taxable supply, at any point in time you are selling, you should be able to record your exempt supply and your taxable supply. Let me just chip this in. Nexus BI has developed a comprehensive ERP system to manage the businesses of SMEs across Ghana. So once you are done, you should be interested. Right. So once you have a system where you're able to record exempt supply and taxable supply, you will be able to know the revenue that you are getting from taxable supply and the revenue you are getting from exempt supply. Then you can use those two revenues as a base of apportioning your input credit. If you don't do that, you realize that someone steps in and they use what assumptions to what apportion the credit for you. You might not get the full benefit of the credit. So it's important to know this. Improve tax planning. Any business owner, any finance officer who or consultant who understands inputs, exempt VAT are in a position of managing their tax exposure. Right. So if you are entering into a business of exempt, you realize that you are able to reduce or avoid the pressure or the legal obligation of charging for VAT and filing for VAT. So it improves tax study if you have a solid knowledge of your exempt supply. Accurate VAT compliance, as I said, if you are dealing in both exempt and taxable, you should know that you are supposed to segregate your exempt supply revenue and your taxable supply revenue so that your input credits can easily be computed. And it enhances audit readiness. You'll be in a position to know that a supply is exempt, and for that matter, you are not supposed to pay VAT on those supply. We'll pause here. We'll take questions. We'll take comments from the various participants. So far, what has been discussed, we went through to understand the legal framework of the new VAT Act. The new VAT Act is Act 1151. It started this year. It came to repeal the Principal Act 870 that was passed in 2013 and any amendments attached to 870. We went on to look at how to register for VAT and how you can get deregistered if in the old Act 870 you were a supplier of taxable goods but your threshold was, let's say, 600,000, but still in the new Act it's 600,000. The benefit of doing this deregistration, we went on to actually cement our understanding of exempt supply and the strategic importance of understanding exempt supply. Some of them is as simple as going to a shopping mall and being charged VAT on everything that you purchase at a counter, where it's need not supposed to be so. So this masterclass gives us the knowledge to question some of these current issues that is happening around us. I also made it clear that some businesses are dealing in purely exempt, but they are being made or forced to register for VAT or present a VAT certificate as part of a tendering process or a KYB, know your business process. The point is, some businesses or government institution can force you to register for VAT even if you are dealing in an exempt supply. But after that registration, it is to make your document for tendering process complete, right? But after that, you are not obligated or you are not supposed to charge for VAT on when you make out those exempt supply, even though you go to register for VAT for those exempt supply. All right, so I thank you very much for your audience. We will open the floor for questions.
Thank you so much, Bernard. That was quite an insightful one. To the audience, if anyone has a question, please you can raise your hand. Mr. Abdul Salam, please you can go ahead.
Hello, good evening, and thank you so much, Mr. Bernard, for the for the wonderful presentation. Um, my question over here is on the tax exemptions. Um, I'm um, I'm more specific on the pharmaceutical distant items exemption. Does this deals with only, or is it related to only over the counter pharmaceutical items, or like, let's say for instance kind of IVF consumables, or okay, in a whole, I just want to understand for that pharmaceutical items, what and what, like what specific is the exemptions on it.
Okay, so duly noted. I don't know whether I can take more questions then answer them as a go.
Does anyone have a question? Aside Mr. Abdul Salam, so that we can answer them at a go. Bernard, I think you should go ahead with answering the question. Maybe as you are presenting, someone may have a question.
Okay. So first, supply of pharmaceuticals in Ghana are exempt, and there's an age harmonized code for those that we are importing. So if it's under the harmonized code approved by the Minister of Health, importation of pharmaceutical services, pharmaceutical products are also exempt. What you asked falls under medical services and medical supplies, right? So look at it here, point 11. I don't know that it's clear enough. So the IDFs are medical supplies. So medical supplies, the IDFs will not fall under pharmaceutical services, or rather fall under medical supplies. So medical supplies are also what exempt.
Okay, okay, okay. Thank you. I think it's
They're
clear enough.
welcome.
So on the, like, exempt for only VAT, so that I'm bringing something else. What about other related taxes like WHT or among the others?
No, so with this particular exemption is at the top here. We see Act 1151. So it is
Yeah.
VAT exempt. It is the 15% exempt. So that's what the exemption covers. So
Okay.
it is VAT exempt. And in most cases, supplies that are VAT exempt are also levy exempt, right? In most cases. So we are looking at VAT and levies. Any other taxes, right?
Yeah.
That is not the subject of the masterclass. So if
Yeah.
you are into the business of, let's say, running a school, right? Running a daycare school, the provision of daycare services, it is exempt, right, from VAT. It is exempt from VAT and levies. But the teachers that you have in the school, if you are paying them salaries, that employment income tax is not exempt. There are several types of taxes in Ghana. You can have
Yeah.
communication service tax, we can have VAT, you can have customs, employment income, withholding taxes. There are several of them, but for the purposes of VAT, this is the exempt schedule. So if you are importing those medical supplies, they might be exempt for VAT, but they are not exempt from import duty.
Okay. Okay. So you are not exempted from import duties and other related levies, but the supplier you are buying from, the supplier can. kind of though I know it's not part of this class VAT, but the supplier can also add WHT on his invoice when sending it over to me.
Come again.
Yeah, I understand the part you mentioned that okay, you are exempted from VAT under the Act 1151, but you are not exempted from maybe other levies such as let's say the import duties and among others. Um, okay, I don't know. Maybe this one is a knowledge outside the class, but I actually want
No,
to know if
feel free.
WHT, if you are not
Mhm.
exempted from WHT from the supplier.
No, for the exemption of WAC for the purpose of my audience, it is withholding tax.
Yeah, withholding tax.
Withholding
Yeah.
tax, withholding tax. You don't even get exemption for withholding tax. What businesses get is temporary exemption for withholding tax. Withholding tax is simply uh, income tax or company income tax paid in advance or collected in advance. That's the purpose of withholding tax. So the exemption that usually GRA gives to businesses for WHT or withholding taxes is because of sometimes there's a need for the business to preserve cash flow for operation. So if they sell to you and you are paying them and you are withholding taxes, they if you are withholding part of their income as taxes, they don't get the full revenue or cash
Yeah.
flow to
Okay.
operate. So they are sometimes given exemption for the upfront payment of withholding tax. But at the end of the year, when they prepare their tax return, any tax that is due, they are supposed to pay, right? So in most cases, businesses are given that withholding temporary on account exemption, but the rationale for bringing withholding, which is collecting tax, company income tax or entity taxes in advance, is still achieved when we do the end of the year tax filing, right? But for exempt
Yeah.
supply under Act 1151, you are exempted in absolute terms. There's no way again that you pay the VAT. So if I am into the supply of medical services, right? If I'm giving out the
Yeah.
medical services, I am not supposed to charge VAT. That is one aspect of the several tax law that I face as a medical services company. At the end of the year, if I have made profit tax and VAT are two different taxes. If at the end of the year, if I've made profit, I'll be obligated to pay any CIT or
CIT.
company income tax on those
Company
profits.
income.
Do you understand? Yes. So if I sell my medical services to
Yeah.
you, right, and I don't charge you VAT, the medical services is VAT exempt, so it doesn't even come in at all. But when you are paying me, right, you can withhold
Yeah.
when you are paying me. But if I have gotten a temporary exemption status from the GRA to prevent you from withholding on that medical services revenue, thereas you are supposed to pay me. Even if I get that exemption, at the end of the year, when I prepare my account, I will still be liable or obligated to pay my company income tax. So let's please note that in our first webinar, we said there are several tax types, and the tax type comes because of the government identifying a tax base. And once a tax base has been identified, there is a law that is enacted to collect the revenue from that tax base. So with our masterclass, we are just focusing on just one tax type, which is VAT. There are several other tax types like CIT, gift tax, capital gains, several of them. That is not the focal point of the discussion. But anytime where there are questions that borders and any of them, I will try my best to provide the needed clarity. So, Abdul Salam, I don't know whether I've been able to provide the needed clarity for you.
Oh, yes, please. Thank you so much. Okay.
Yeah, welcome.
The room is open for more questions. Please, if you have a question, you can raise your hand so that we go ahead and answer you. Hi, Loretta. Please, you can go ahead.
Loretta, if you're speaking, you are muted.
Good. Thank you for the presentation. So my question is on point 14, the supply of machinery and parts of machinery. So if someone supplies machineries like big trucks, excavators and that, and I know they are exempted from the VAT if it's used for mining, but how would they know the customer is going to use it for mining or construction or any other thing? Do they have to know the purpose of the purchase before they tax
Okay,
the
so
customer?
yes, usually there is a declaration form that you need to fill. Yeah, you have to declare.
Okay, so the customer has to declare what's the purpose of the purchase.
So obviously, you have to declare. So there is import declaration form. So there's a custom import declaration form that you need to fill. And you see, there's two things. You see, you are the one that wants to claim that exemption status, especially when you are importing. Right? Usually, see this machinery and part of machinery. In most cases, you import them, right?
Yes.
In most cases, you import them. Good. So when you import them and they get to the port, the obligation is on you to prove to the authority that you are going to use it for these purposes. That makes it what exempt. So if it is even agriculture use, you have to prove. So you have to prove that you're going to use it for your business, right? And this is your business registration document. The thing on the bill of lading or the import declaration form should match the thing of the company that has been registered for agricultural purpose. So the obligation is on you to prove. It's not as if it is a holistic form of exemption granting. So with this one, see, with the import one, you would import the thing and you get to the port. And you have to now prove that what you are using for agriculture. So every documentation that you need to prepare before your equipment arrive at the port to claim that exemption, you have to. And sometimes some of the exemptions, as the import one, you would pay for it, then you apply for it, and they give it to you as an exemption.
Okay.
So you realize that it is not the business itself. With when you take example manufacturing, the point C, can you see the manufacturing?
Yes.
If we are manufacturing, let's say textile is not exempt, right? Textile is not exempt. If textile is not exempt, you realize that the business itself is not exempt, right? What we produce is not exempt. There are some of the exempt supply. They are the items that we buy and sell. So when you take, for instance, medical services, right, or pharmaceutical products. If I have a pharmacy, what I sell by nature, my business itself is an exempt business because I sell pharmaceutical products, right? But when you take manufacturing, the products that I'm manufacturing might not be exempt, but it's because I am bringing in a machinery for manufacturing that makes the import VAT exempt. Please understand.
Okay. Yes. So
Right.
my question is, okay, let's say a company like Strong Machines, they import machineries to sell to people. So because they are importing those kind of machineries and parts, are they exempt?
No, they are not exempt.
They are not exempt.
They are not exempt until, see, at the point of importing the machinery in inventory, they are not exempt because at that time they can't declare or they can't prove that the machinery is going to be used for any of these purposes. So at that point, you can import a machinery. The machine can be used by a downstream petroleum operation, right? So the strong company you mentioned, the product, the inventory that they have can be used for a downstream operation. At the point where they have imported it into inventory, they can prove. The only time they can prove is when they are making the sale to, they are making the sale, that makes it what exempt, then they can claim. So at the point of importing, you would have to pay. Or unless you have a bonded warehouse system where the GRA gives you a bonded warehouse, the machinery are kept there, you only pay when you draw from there. But if you are able to, if you have the cash flow to pay for your own import duty and import VAT, you will pay for it, bring the machinery to your inventory. Then later on, when you are making any sale, you can make that justification to get a refund of any import duty that you think you are entitled to. So that's a very good question there. But realize that point 14, the business itself can be a taxable business, but it is the machinery importation or machinery purchase that makes it what exempt. So you realize that if, and point 14 is very important, say supply of machinery and part of machinery specifically designed for use in the following activities. So Loretta, the simple answer is if you import it and you bring it now as part of your inventory, you pay for it. It is when you are making the sale, right? It's when you're making the sale that you claim the what? You claim the credit for them.
Okay. Thank you very much.
You're welcome, Loretta. But at any point in time, we can always have a further, how do you call it, a top level discussion depending on the value of the item in question. So if, for instance, as a business, you only supply to mining companies, and you would not supply to a non-mining company or a company that does not operate in the upstream petroleum industry. And over the years, you have a track record. If you import, there is a listening institution. I mean, like the top, they are listening. So you can always have a discussion with them that this is your operation, this is your business model. You don't sell to a non-mining company. So if you are made to pay the import VAT now, it will affect your cash flow. Because if you pay now and later you have to come for the credit, it's affecting your business. They are ready to listen.
Okay.
So that can be like a top level discussion.
Okay. Thank you.
Okay. You're welcome, Loretta. We want to wrap up. Any more questions? Okay, so this webinar is recorded and will be hosted on our YouTube platform. You can kindly reach us on nexusbifutura.com. We would upload the template of the slides there. You can always have access to it. Feel free to reach us on the numbers on the screen. Our office is located at Achimota Kingsby. You can always set up a consulting meeting with us, and we are grateful. We are grateful for your time and your audience. We've pasted our link in the chat box. Kindly connect with us. Follow us on all social media handles, Nexus BI. We post important updates on changes in tax laws and how businesses can position themselves to be compliant. We also provide training. As I said, our Excel training school is coming off, a 12-week program, free of charge, where you have experts who have certificates in financial modeling and valuation, business intelligence and data analytics, Excel MVPs, free of charge. Free. When we say free of charge, it's free of charge. Just come with your laptops ready to connect online and learn from a seasoned expert. We are grateful for your time, and if we don't have any question again from our cherished participants, we will call it a wrap up. Thank you.
Thank you so much, Bernard, and thank you to everyone for joining. As Bernard has already said, if you check our chats, you'd realize that we've sent a link for our social media handles and also our WhatsApp channel. Please do all to join the WhatsApp channel. We send updates on our webinars and trainings and even job opportunities from some of the clients that we handle.
So I think we've lost Sharam there, but nevertheless, thank you. It was an insightful time having you on this call. And thank you for every participant as well. Most importantly, those who answered those 12 questions.
All right, thank you.
Welcome to our maiden VAT Masterclass. We begin shortly. Make yourself comfortable. VAT compliance is one of the most demanding parts of running an SME in Ghana. The rules have changed and the expectations are higher. The cost of getting it wrong keeps rising, and you are not alone in feeling the weight of it. The questions every SME owner is asking: do I still need to register under the new threshold? How do I migrate cleanly from the abolished flat rate scheme? How do I claim the input tax credits the new law now allows? Am I ready for electronic invoicing and real-time reporting? Today, we will work through each of them.
This VAT Masterclass is built for SMEs, not a lecture, not a theory class. It is a practical working session.
It is designed to help you understand the system clearly, plan effectively, and stay compliant without overpaying.